Hello and welcome to TA for Traders. I'm Nigel Croft and this is Friday the 26th of May. In this short video we'll be looking at the charts on the US dollar versus the Japanese yen. On the daily chart we'll see that I did draw a downtrend line. We'd had gone above it previously, we've come back below it. We've also gone back below the downtrend in 50-day moving average, so there's worrying signs coming through on the daily. On the weekly chart we'll see that we're at key support of the 200-week moving average, and on the 4-hour charts we'll see that we are at a key support level as well. So on the daily, you can see that previously I'd drawn this downtrend which went through the highs of the 3rd of January and the 9th of March. We did for 5 or 6 days go above the downtrend. From memory, I think I did a video around this time and I was saying it really needed to break that high for it to really confirm the break of the downtrend, because the downtrend is a pattern of lower highs and we would need to have broken that. Anyway, we've now come back down below that trend line. I've kept it in place. I do that quite often, actually, keep an old trend line just so we know where it was and where it's trading. Other people will do that as well, and therefore it is still relevant. And you can see actually the last 3 days we have edged up to that trend line and then come back down, so it's still a dominant factor. We'll also see that this blue line is the 50-day moving average. We've come back below there. That will be a downside influence on the market. The 200-day is moving up. That did give support on the 19th of April, 17th of April. So therefore, that if we do come back towards that at 109.88, it will give support. And at the moment, it does look like that is going to be the case. The 20-day moving average is rolling down. Down the road, maybe in a week or two, that will be crossing the 50. If they're both still moving down, if the market hasn't got above 112 by then, that would be a downside influence. Looking at the momentum indicators, the RSI is back below 50, 44.08, and is showing negative momentum, and the MACD as well are showing negative momentum. So really the way this market's easier for it to move is to the downside at the moment, looking at that daily chart. On the weekly, and you can see here that we're gaining support from the rising 200-week moving average. That will be it's moving up. It's a key level, but as you can see here, from mid-April we can go below it for a week or two. Because it's moving up, it's still a dominant influence. The downtrend line obviously coming down. Those two are about to meet. Which one's the more dominant, the downtrend or the 200-week? Let's find out. Looks like the volume, we are coming off on the downs. We are getting larger volume, which is a slightly worrying sign. You can see the pickup in the volume as we've come down. RSI back below 50, 48.56. and MACD tracking down as well. So again, negative momentum pictures coming through here on the weekly. On the 4-hour chart, and you can see these levels of support that we're now testing. These come from the 23rd, trading from the 22nd, 23rd of May. You can see that the 20, 50, 4-hour averages are tracking down. They're negative influences, and the 200 is also flatlining. RSI and MACD again negative. RSI at 36.07, and the MACD just starting to flash a sell signal. So that will be indicative that we are going to break this support, with the next support seen down at the 110.25 level. And looking at the support resistances, on the downside, support 110.24, then at the 200-day 109.88, with resistance at 112.13 and 112.41. So that has been TA for traders, Friday 26th of May, having a look at the dollar against the Japanese yen. Again, more charts that actually look more negative, so be careful out there. Please remember, these videos are for educational purposes and are not meant as an investment recommendation. Please do read the disclaimer. Thank you.